Good afternoon, everybody, and thank you very much for attending this panel discussion on building resilience against future crises. My name is Jeremy James, and I'm the managing partner at Ownet, and I'll be facilitating the panel discussion that we're holding today. I'd like this session to be as interactive as possible, so please do use the Q&A that should be open to the right-hand side of your screen to raise any questions you have, and I'll endeavour to put these to our panel. And just as a note, the webinar is being recorded, so we will share this with you over the next couple of days. So as mentioned, the webinar's focused on being an interactive panel discussion where we'll look to cover a number of different themes related to building resilience, and we'll look to answer your questions within that overall discussion, but also at the end of it as well. And hopefully we'll get time to get to all of those that you pose. However, before we get into the discussion itself, I'd like to give a brief introduction to the topic and also to our panel as well. So we'll all recall many different crises that have happened over the years, whether they're financial, whether terrorism, war, or health like this most current one. And, you know, we know that these are going to occur periodically, and we know that they're a constant. But what we don't know is the characteristic of each of them. You know, we don't know if they're going to be local, national, global in nature, avoidable or not, and to what depth they're going to affect different businesses and different nations, etc. But what we do know is that they will have different characteristics and they will have those different impacts. And we do know that there will be another one. But as said, we don't know what it will be. So the question that really comes out of this is, should we, and if we should, how should we build operational resilience and plans to ensure we can weather the next known but unknown crisis and be ready to recover quickly, and where possible and where it's the right thing to do, take advantage of any opportunities that may arise. So that's going to be the theme of our discussion today. And as I've said before, I'd encourage you to ask questions of the panel as we go forward. Now, a few weeks ago, we ran a survey on crisis recovery and resilience to gauge the thoughts of our clients on where their priorities will lie as we emerge from this current crisis. And we'll be publishing those results shortly, and we'll make sure that everybody on here receives a copy of those results. However, what I wanted to share was just, you know, the very high level points that we had. So in the survey itself, we asked sort of 6 high level questions with sub questions below them. But the first being is, to what degree are you affected by the current crisis? And as you can see, 96% of respondents came back with being impacted. I suppose the saving grace of that is that only 11% are significantly or very significantly impacted, and 55% are moderately. But it shows the breadth and depth of this crisis that we're in. And when we then followed up with the questions around, you know, what would people be looking to do to try and build resilience against 5 different areas, those being, as you can see, employees, customers, supply chain, logistics, liquidity, and technology and IT security. The majority of a large majority will be putting in place new processes or looking to prioritize on processes and activities, with probably unsurprisingly, with the nature of this crisis, the largest focus being on employees and on the technology and IT security. So when we look at that, you know, there's obviously a big impact. So what I'd like to do now is to actually move into the panel session itself and introduce you to our panel. So first off, I'd like to introduce you to Gareth Evans. So Gareth has supported some of the largest global corporations, helping them to use data and technology to solve a broad range of risk and regulatory issues. He's an extremely experienced risk and compliance and audit practitioner, and has been at the forefront of digital automation since around 2005, both as a Big Four advisor and then as an enterprise risk technologies leader at Refinitiv. And Gareth is now the managing director of Digital Risk Advisors, which he founded in 2019 to basically help connect organizations, vendors, and investors to use, grow, and finance market-leading risk and regulatory solutions and supporting services. And on a personal note, Gareth is making the most of the quiet roads to try and stay fit with his cycling, and he's looking forward to the day when the cycling events can return to the calendar. But in the meantime, he's got and you can probably see it in the background, he's got his old house that requires his continued care and attention. But I do also know he loves his skiing and traveling, which I know has been curtailed, and he had to miss a trip right at the beginning of the lockdown. Then I'd like to also introduce you to Katy Giles. Katy is the COO for capital markets at HSBC. She leads a global team which was set up to partner with the business heads in London, New York, and Hong Kong. And her team enables the capital markets group to reach a footprint of clients globally across Asia, Europe, and the Americas. And obviously in that role requires, you know, delivery-focused mindset. And Katy obviously looks to maintain strong relationships, even though there's the inevitable tough discussions, which you can imagine in banking. Katy's a management accountant, joined HSBC in 2016. Prior to that, Katy was at RBS, where she led a series of strategic change initiatives, and also had a role in the ABN AMRO integration into RBS. On a personal note with Katy, the big word here is she used to enjoy a lot of things like traveling, skiing, cycling, but recently with the arrival of young twins after their elder brother, that's been curtailed. So she now is looking forward to obviously the day when they can do all of those activities as a family. And finally, but not least in any way, I'd like to introduce you to Andrew Jenkins, who's the Chief Risk Advisor at BT. So Andy is a risk management expert, having both consulted and worked with numerous leading blue chip organizations on good and best practice. His expertise spans a huge range of industry sectors and disciplines, including the effective identification and management of operational, financial, hazard and strategic risk. And like Gareth, Andy has previously worked with the Big Four, and he's advised on a range of many risk-related topics, including board level and risk committee reporting, simulation and stress testing, and putting in early warning systems, emerging risks and horizon scanning. So absolutely key experience to the discussion that we're going to be having. And on a personal note with Andy, again, like the others, he too loves traveling. Most recently, he took a month to backpack around Sri Lanka with his partner and baby, which must have been an interesting and enjoyable time. He also enjoys jiu-jitsu, or as he puts it, wrestling in heavy pajamas, and also donning too much lycra to do the occasional weekend cycle ride. So that's our panel, all fully ready to have a, as I said, interactive discussion. And so please do share your questions as well. So my first question I'd like to pose to the panel, and I'll start off with you, Katy, if I may, is should businesses learn and invest from this and previous crises to protect against future unknown crises? Or do you think the variables are so great that actually the investment isn't worthwhile and businesses should just look to build contingency and insure against weathering the next crisis?
Thanks, Jeremy, and thanks for inviting me to be part of this discussion. It's certainly going to be interesting to hear what other people have to say about the way we're looking at the current crisis and future crises and how to build resilience. So on this question, Jeremy, if we look back to some of the crises that you mentioned as you were introducing the session, the financial crisis obviously being the biggest one for the banks in recent times anyway. The regulations that were put in place as a result of the last financial crisis have actually helped the banks to weather this current one. So we now have better liquidity buffers, for instance. We have more control over what risk we hold and so on. And had we not already been through that first financial crisis, I suspect that we would be in a much worse position handling or weathering this current storm. HSBC and I think almost all of the other banks have weathered the storm so far very well in terms of liquidity to support our clients and to support the economy, which is exactly what the banks should be doing. So in terms of looking forward, we absolutely need to be thinking about the lessons we've learned from this crisis and building on the controls and closure of potential loopholes and looking at risk differently to help us weather even better the next crisis. One thing that I would just add as well is that speaking to our head of continuity at HSBC earlier this week, the one thing that we do need to be careful of is that we don't forget that pandemics are not the only crisis that we might face. You know, from the perspective of BCP, we still are open up to cyclones and earthquakes, as we've seen in recent weeks and months. You know, the earthquake in Mexico just earlier this week, I think it was. We still have to make sure that we're resilient to those risks. So while of course we'll learn and plan more for future, we also have to make sure that we're not forgetting about all of the other potential risks that we have out there.
It's a really good point that Katy raises there, particularly around the fact that it's not the only type of crisis. And I think what that speaks to as well is that there's been a lesson learned from business continuity planning for over the last few months is sometimes they're proven unwieldy and they haven't necessarily empowered people to make decisions. And I think that's key because you know, if you build a plan around a particular scenario, you can bet your bottom dollar that won't be the scenario you're facing. So what can we do, or what can we learn about how we make plans lighter, more risk focused, but allow people to react more effectively to the specifics of the crisis they're facing next?
Last point I would add on that, Jeremy, is just saying, you know, I think you can become fixated with trying to understand what's the causation of all the different events and then how that will flow through. And as you said, there's so many different variables. If you start to focus less on sort of causation, which is really important, obviously, but when you're looking at crises, black swans, that's really quite difficult. Focus on the events and the impacts, and that can make it a lot easier.
Yeah, no, absolutely. And following on from that, and maybe I'll come to you on this, Gareth. As also was shown in our survey, a very large majority of respondents, so I think it was 79%, have said that they're going to accelerate digital transformation to try and put resilience in against the next crisis. Where do you think that priority should actually lie when we think about, how you look at the consequence rather than the causation?
Yeah, I think there's three areas I was thinking about here. The first is obvious, and actually I think most of the survey responses put this in, was around InfoSec and security risk. Our network resiliency will be tested and is being tested like never before. We've seen that in terms of opportunistic cyber criminals trying to test the network now that more and more people are working remotely. I think, to be fair, a bit like liquidity, the liquidity point made earlier, a lot was put in place that would defend against these sorts of things. But I think we've got to understand this will be an increased risk that won't go away, because if there's one thing that I think is here to stay, is an increased remote working approach. The other thing around this as well, though, is as capacity eventually returns, that will place or it will benefit those who are using cloud. But the one thing I would say around cloud is there's almost this assumption, if we use cloud, we're resilient, right? And I kind of wondering or being concerned that as we use cloud, and very that's about using a third party to provide the cloud, we are all placing great trust in those providers. What is the risk and what's the fallback if there are problems in terms of attacks to the cloud, or frankly the cloud's capacity? But then if I try to turn it around and think more from a positive, it's a time of disruption, whether it's this crisis or the financial crisis before, when smart organizations are actually able to benefit by adapting quickly, listening to the market and thinking about what opportunities is now presenting in terms of new ways of working, new client demands, and so on, and how can we capitalize on that. It sounds mercenary, perhaps why I'm saying it, but I do believe we should be thinking much about what potential opportunities will something like COVID or any crisis present that benefits our customers as much as it benefits us.
Gareth, you mentioned there around the opportunities, and we as will be with HSBC, have massive call centres in BT, thousands of staff. And where you had a model where it was very focused on everyone being in the immediate geography because they had to come into the call centres, it provides a great opportunity now to remove some of those geographical hurdles and boundaries and problems to make sure we've got the right capabilities, the right people, help with churn, help with shift patterns. At the same time, yes, there's the risks around data and ensuring its security and safety, a lot of payment card information and things like that. But on the flip side, if you manage with the right measures in place, great opportunity.
Yeah, no, completely agree. And I mean, we at HSBC have accelerated some of our digital plans in order to support the remote workforce. The fact that we're all on Zoom and I'm using it through my work laptop is, we weren't planning to roll out Zoom quite yet, but we did it early to support the COVID response. I mean, I think the one thing that we're quite mindful of is the cyber risk and the fraud risk that lots of people working from home or remotely can bring, and making sure that we have robust plans to manage that is going to be absolutely key in future.
Yeah, absolutely. And I think, as you guys have sort of mentioned, as technology and new ways of working continue to innovate, and we've seen that accelerate massively through this crisis, there are going to be sort of challenges in keeping on top of what those risks and the ability to build robust controls to ensure that resilience. So where do you sort of see some of the challenges in keeping on top of what needs to be done to enable that innovation to carry on growing at the speed that it needs to. Probably Andy, shall I come back to you on that one?
I think we've been touching on technology provides, great opportunity. I think one of the dangers is because it's moving so quickly, it's making things and change happen so quickly. A lot of visibility and what's happened with like reputational damage, the acceleration of things around security, hacks and breaches like that. New types of risk emerging, which people within the organization, experienced people, may not be familiar with, because it's new types of technology, the way those technologies integrate and communicate with each other. I think one of the things that we're trying to do now, and where we've had, guidance around emerging risks and trying to be much more focused on having better processes in place to make sure we can identify those risks, and then how we actually manage those risks, which might develop over multiple year periods. Trying to bring together experts from various different lines across the business who might understand that value chain versus how we might have looked at it previously in silos is one example. And you spoke around the control environment. Not only does technology put in place or have a potential greater risk, but where we see it from controls, you've got machine-to-machine learning, IoT, artificial intelligence, potential ability to make and automate some of your control environment, which is obviously a lot more robust than having individuals have to remember to do something, or that. I think that is going to be an area where we see lots of really innovative movements made in the future around control and effectiveness.
And just on that, there's a question from one of the attendees around that point exactly, which is, and Gareth, you touched on this as well, is, the question is, how much at risk is the world of a global digital pandemic within, the world now with the Internet of Things? So if you had a digital virus, where, what is there being put in place that we could do to mitigate that? But how at risk do you see things?
Yeah, I think, it's a great question, isn't it? I think, frankly, a bit of a scary thought. If I just touch on Andy's point about the fact that, with new technology comes new risks that frankly a lot of us aren't going to understand, and therefore I think that problem will manifest itself here when it comes to Internet of Things. It's saying, do those of us who work in risk really understand the risk profile that comes with Internet of Things and greater connectivity? Might there even be the case of government intervention to actually slow down the connectivity because they're worried about how somebody intentionally tries to disrupt the Internet of Things? It causes the pandemic, as Nick's question's pointing out. So I absolutely think it is a risk. And it's difficult really to say much more than that in terms of how great a risk it is and how much of an impact it may have. To try and be a bit more positive around it, I do think that if there's one good thing around, from a risk point of view, of going increasingly digital, those same capabilities that are used to improve customer experience, to drive efficiency and so on, also allow you to be more savvy when it comes to risk. In my own world and my background, when we talk about risk management technology in the past, largely it was glorified workflow. It was around manual intervention and just managing that risk process. Increasingly now, we can use technology to continuously monitor risks and use AI in new ways that allows us to be more savvy at risk. So I do think that's the flip side, or the positive of this technology, is how as risk professionals we use that to better understand the risks we're trying to manage.
Perfect. And Andy, just coming back to you on that same question, I'm assuming from a BT perspective, Internet of Things must be a big topic for you guys. And as the risk advisor, where are you in your thinking on sort of a digital pandemic?
I think what we're trying to do is, you're absolutely right, Internet of Things is a massive play for BT and those sets of participants. But what we're trying to do is, bring together end to end all the value, all the different pieces of that value stream and the experts from across there to try and understand how some of these risks might even be aggregated. There might be some sort of correlated risk that when we look at things in silos, we haven't necessarily understood ourselves. We might look at someone from the risk from a customer perspective, doesn't understand, well, what might be some of the risks that technology provides around security, for example, versus customers' experience.
Yeah. And a follow-up question to, and again, I'll probably focus this to you, Andy, to start with. But obviously, we've talked about sort of using the technology, but with this, it's all about teams of people working together to make sure that they understand the full enterprise and the risks that are associated with it. So do you envisage organizations changing the way that their risk functions work with the line teams and operations teams? And do you actually see this working in practice? Because I know something that has probably been talked about for years.
Lots of people think, we focus a lot at an enterprise level of having a top 10 strategic level risks, which are done each quarter. In many or some organizations seen as a tick box activity. I think there's certainly got to be a change in that culture and working with the business. And I'd say, for example, working much more collaboratively with them to map out value streams end to end, understand key dependencies, assumptions, drivers within that, undertake modeling of different scenarios and how that might play out around some of the sensitivities and those assumptions that we've made within, BT. We've spoken around increasing people's personal risk radar out in the business and have created a central modeling team to really help those individuals when they identify potential risks and work with their leadership teams to understand how that might manifest as scenarios play out, not just in their own area, but across the end-to-end value stream, which might be outside the business unit or affect at that group level. And I mentioned earlier as well around emerging risks. I think that's a really big piece as well now, where we're trying to break down silos, bring people together as the digitalization and technology connects us all together, makes impacts really realized much more quickly. I think that's something which we're really focusing on trying to facilitate, where we sit centrally versus the business units and their verticals.
Yeah, and I mean, we're doing work on that at the moment. I mean, which we actually kicked off pre-COVID, but it continues obviously, is around our non-financial risk. So as the bank, we're obviously very used to dealing with financial risk and regulatory risk, but the focus has changed in the last number of years, also to make sure that we're looking at non-financial risks, which include cyber risk and continuity risk and the other people risk, resilience risk that we also need to think about to have a continuous business model going forward into some of these issues.
Yeah, no, absolutely. And I think, that whole piece around sort of business continuity and, not everybody, but majority of organizations had business continuity plans in place coming into this crisis. But, a lot of those might have been paper exercises. A lot of them might not have been sort of kept up to date. But sort of in your opinion and experience, what do you think are the key factors that you need to have, and think about to make those successful, or what is a failure point with those business continuity plans?
So going into this current crisis, we obviously look to our business continuity plans as our starting point. And we did have pandemic risk in our business continuity plans, but we hadn't quite appreciated the scale and sort of magnitude of how this would play out. So we do have things like split site models, which work very well if there's a kind of proper physical disaster, or actually a less sort of fastly moving pandemic type situation. That split site would have worked really well. Going into the business continuity, we obviously did a huge amount of testing of our systems and platforms ahead of times, and we were thinking about how this current situation would play out in different scenarios. So what happens if the schools close? What happens if people are caring for relatives? How are we looking at this front to back to make sure that not just in my business that the sales teams are supported, but also how are the operation teams going to manage, and really thinking thoroughly through the consequences. Again, speaking to Paul Cowan, who helped me prepare for this session a bit, one of the things that we need to do better in my particular business area is more continuous testing of that business continuity response. So traditionally we've had, people going down to our business continuity sites every quarter or whatever it is to test the kit, but actually some of the businesses at HSBC do send people for periods of time, you know, week or 2 weeks at a time. In my business area, that was slightly more difficult to do ahead, but we've been discussing what we can do going forward to make sure that works better. So I think in terms of business continuity in general, I think it's flexibility, fungibility, preparing for different types of crisis that I think traditionally we've always thought about the physical crisis, the physical issues, the building problems, and not so much the pandemics and the digital issues as such. But I guess to my point earlier, you know, with natural disasters happening as well as potential terrorist attacks, physical attacks, we can't lose sight of the fact that we need different plans for different situations.
Yeah. And I'll just add to that, Jeremy. I think it's quite easy when coming up with, you know, your continuity to plans to choose a particular scenario which you feel that you may be quite resilient to, and to point to and say we are resilient. But I think the key learning is not to take one which is not challenging or stressful enough on the business, and to try and layer in different events as they might happen. You know, as Katy was saying, you might have, for example, the pandemic, which then plays out, and then you see widespread riots as things, you know, where, for example, in Hong Kong around that political situation, you start to layer them on and really stress the organisation. You'll start to understand where there are those real vulnerabilities and black swan potential events which could derail things.
I think just a simple anecdote as well. I've always envisioned a BCP as something you write and it goes into a safe, and I think that's been the case for many organisations, because one of my clients was saying, you know, we've got to a certain bit of the plan when we dusted it down 4 weeks ago that says, right, that task lies with Jane. Right, where's Jane? We can't find Jane. Oh, actually, it turns out there's somebody else in that role now. So they came up with well-intended plans that were easy to follow, but they quickly became out of date.
Yeah, and you know, I think, you know, we've seen that with our clients. You know, at the beginning of this, it was taking people sort of days to actually react, because exactly that, you know, the people that were the key contacts have either moved on, or just identifying who should be the key contact within a certain area, who's going to have the expertise, wasn't necessarily trained up to actually perform that role. They might be operationally the right person, but from a continuity and a resilience point of view, they haven't actually been focused on from a training, making sure people understand what is involved with it. And I think that goes to your point, Andy, about stress testing all of, you know, those plans, and not making, you know, just one easy assumption of today we have a terrorist or today we have a health, you know, it's, can you layer them on top of each other?
And actually, in the here and now, there was a Virgin Media outage yesterday, I'm told, which would have taken down a lot of people's VPNs and ability to log on. So even in the here and now, we still have an ongoing potential continuity problem if everyone's remote working, but people can't access the internet. So we absolutely have to remain nimble on this, I think.
And Jeremy, just one last point on that. You mentioned around people coming on to and joining these calls. It can feel reassuring to have multiple people. You know, I've been on calls where you've had 80 odd people trying to manage it. Less is more. And sometimes, you know, if you're absolutely clear who are the key people on it, who needs to, it's accountable, who needs to make the decision, that would be one of the most valuable things in terms of agility of response in some of these crisis scenarios versus, you know, paralysis by having cast of hundreds.
Yeah, I think you're absolutely right. Anything done in committee is always going to take longer and harder to actually focus on what really needs to be done. That's a very good point. And I think, you know, it's sort of taking on that point on as a little bit as well is, you know, the whole culture of the world is moving. And, you know, we've touched on sort of, you know, the remote working where, you know, split sites don't work, you know, getting technology there in the right way to be able to facilitate that. But obviously that takes a cultural change to be able to drive that remote working. And it also leads into, and this is also a question from one of the attendees, you know, is what changes need to be put in place from a sort of people HR perspective to mitigate some of the risk that is there with remote working, different ways of working for both the organization, but also for the people that are working remotely as well. And yeah, I mean, Gareth, do you want to take a
stab at
that one?
Yeah, I mean, so let me anecdotally share a personal experience. I found COVID has made working for me easier from a well-being point of view than last year or before COVID. Why is that? Because I set up on my own last year, but it meant there's a large amount of time I was working on my own from home whilst getting things together. After COVID happened, all of a sudden my wife is now working from home. And so that is why for me it's easier, but it's made me really acutely aware of how that will be for other individuals who, for whatever reason, they live on their own, and therefore they'll be going through right now what I went through last year. And I think that depends on demographics, right? So I think certain parts of your workforce may be more likely to be working on their own than others. So I think that was a real chance that we can't overlook. I mean, I can't stress enough how that can impact you if you're spending large amounts of time working remotely. And so I really think we've got to think carefully about that going forward. And one way I can start then presenting a challenge is as people start to go to work back in the office and they start saying, right, well, you have to work in the office, so you should go back. That's going to make it hard for those who are staying at home, right? Because they're going to feel left out. They will start to feel like how I felt last year. So that I think is going to be really critical to think about how we don't just think about, well, what's practical in the office, but what does that mean for those working from home? Now, with all that said, again, I guess we can all relate to is there has been some good stuff about remote working from home, right, in terms of work-life balance and being able to kind of go at a different pace, spend less time commuting and so on. And so surely the right way now is, do we eventually one day treat working in the office how we used to think about an offsite? So you think about an offsite, we're all going to get away together and really use that time to think about what do we want to do differently. Is that a model that could work going forward? Is it we say effectively we work from home, and we have the benefits of working from home, but we also then know that we will be having times to get together in a way that's constructive. And I think that will be the happy state going forward. I think it's some time before we'll get there, but I think that's something we need to aim for.
Yeah, no, very good. And I mean, from a perspectives, both yourself, Katy, and Andy, where you have teams of people and being able to keep that team together, build, the team, and when you think into the future with, bringing in potentially, sort of graduate recruitment or new people into the organisation, how do you see that remote working sort of either impacting that or having to change to be able to take that into account?
I mean, I think that's sorry, Andy, I think that's one of the biggest challenges going forward is as new people come into the organisation, whether that's one new person joining an established team or whether that's a graduate intake or putting a new team together, doing that in the remote working sense is much more difficult. And that's, I think, where Gareth's point is probably one that we should think about in terms of, do you get people together for certain periods and then let them disperse again? Because obviously we bring in interns every summer and graduates in the autumn. We're thinking heavily now about how we integrate those people into the business. In terms of things that we're sort of doing in the here and now, regular team calls, regular team meetings, regular check-ins. I try to make sure I call people if I haven't seen or heard from them for a while, regardless of whether they report directly to me, and just try and make sure I get a sense of body language and follow up with people if I need to. We've also launched a lot of initiatives around mental health during this period to try and support people, but it must be very, very tough for people who are living on their own, especially through periods of lockdown as we've had them.
Yeah, absolutely.
And I just reiterate what Katy was saying. Mental health's been a really big, focus area for us as well. Ironically, we across the organisation seem to be speaking to each other way more than we did previously. I know a lot more about my team because we've made a concerted effort to have these conversations, which is so ironic in a way. But then just to point on Gareth's, where he said, the work-life balance, we've actually found in some instances it goes the other way, because you just start working at 7, you log off at 7, you have a break,
Yeah,
no expectation, and people aren't taking holiday. These are things that we need to really focus on, and you don't want to mandate taking a holiday, but at the same time, you need to think about from a well-being perspective and what works for the organisation as well, achieving that balance.
Yeah, it's funny. So I was thinking practically, is there a way that how do you make it so that people actually have dedicated workspace at home rather than working at the dining table? And I'm not really sure what the solution to that is. Some people have got the fortune, lucky to have their own space, and others don't. So.
BT should buy us all bigger houses.
Yeah.
But I think that's a very good point that you also make there, Andy, is, when people are working at home and they haven't got boundaries on their time, they do cram things in and they're not taking that holiday. That's not just an impact on the individual, but that's an impact on the business, because potentially towards the back end of this year or at the end of a crisis, suddenly people have got a massive pool of holiday, but obviously you have to have that service delivery still to your clients. So how businesses will be able to, try and, whether it's a force holiday or encourage holiday forward, I think is going to be a key element.
Yeah, I mean, I've been encouraging my team very heavily over the last few weeks to say we all need a break. Most of us haven't had a break since Christmas. I'd really like everyone to take a break over the summer, and pre-warning people that I can't have my whole team coming to me asking to take holiday in the last quarter of the year, because it just won't work for business continuity, ironically enough.
Yeah. So following on from that, one of the areas that I wanted to sort of talk around was around, whether regulation should be brought in to help with resilience. And I know obviously in the financial services, the FCA and the PRA and the Bank of England are bringing in operational resilience, and that was something that was being driven and is in consultation now and was kicked off prior to all of this happening. And I'll again start with you, Katy, because from a financial services point of view, but this goes across all industries. Do you guys think that governments and regulators should be strengthening regulations to enforce resilience, or do you think this should be market-led?
So obviously, again, coming off the back of the last financial crisis, there was a lot of regulation that came in as a result, and we've seen the banks hold up very well because of that regulation happening. In this current environment, the regulators are obviously keeping a close eye, and we're regularly reporting activities to them and going through mini audits to make sure that where we've made decisions, that we haven't forgotten about anything, that we've considered all angles and put the necessary controls in place to make sure that nothing goes wrong. So I do think that coming out of the last crisis, that the additional regulation has probably helped the banking industry. I can see the regulators looking at other industries. So insurance, for instance, might be one that the regulators will look at a bit more strongly going forward. And outside of financial services, the food industry could be another one that the regulators look at. How do we make sure that distribution channels and so on are kept open through pandemics or other global crises such as the one we're facing? So whether or not there'll be stronger or different regulations as a result of this crisis for banks, I don't know, but I can see in general regulations getting stronger across different industries.
No, absolutely.
Yeah, and just to say, if not on explicit regulation, through being pushed like the corporate governance code and pushes for transparency, you take emerging risks, for example, greater language about being quite explicit around what you do organisationally to identify and manage those emerging risks. I think is something where, it's not a mandate for companies to do, but by, actually setting out so stakeholders, not just your shareholders, can actually understand how well positioned an organisation is to identify and manage those, can help drive forwards an improvement.
Yeah, and the actually other thing I was just seeing reflection on Katy's point before is, if you look at the regulations in 2008 to 9, you could argue that they absolutely contributed to those stronger liquid positions that meant that we were better protected as we go through this. Now, if you look at the PRA and FCA guidance coming out, the new regulations around resilience, now the focus is more on the individual. So not just would a bank survive, but actually what's it doing to protect its most vulnerable individuals or individual customers. To be fair, I think a lot of FIs were thinking like that anyway, in the same way that some FIs would be thinking about liquid positions before those regulations came out last time round. But if it helps bring or set the bar at a minimum for all FIs, then that's good. And then a bit like other regulations in the past, I suspect that some organisations, even if they don't have to comply, will look at those regulations and say, well, which bits of those should we adopt anyway?
And some supplementary question on that, obviously, when all of the regulation came in from a financial services perspective, there was obviously a lot of noise around the cost of regulation. But obviously there is a payback when you hit something like this as a crisis. But what are the things that you think that could actually be put in place to mitigate the cost, or even actually get value out of putting in some of the risk mitigations, whether, to your point, Andy, whether it's, regulatory or just, code of conduct and governance and visibility? So let's start with you, Andy. Sorry. Are you there?
Yeah, sorry.
Sorry.
Yeah. On the question, was that similar to the last one? Sorry, you just cut out a little bit on.
It was really just about, how can you mitigate the cost of the regulatory by sort of making your risks more efficient?
Well, whenever we look at risk and it's articulated, it's really a cultural point in that understanding, the risk is just uncertainty. There is the threat and opportunity. And so being able to articulate how we try and work with our strategic teams in the businesses now is show that where we manage our risk well, we can actually take more risk more safely. And then that in turn will result in more rewards, and then follow through again and again and again, and the cycle should repeat. And I think that is just a largely cultural piece around not just seeing risk as being an overhead on the downside, but also providing great opportunity on the upside. We see that with all the FANGs. You listen to any of the calls from the CEOs of the FANGs, Google, Elon, they're always talking about Bill, encouraging their teams to take greater levels of risk. And it's not an environment where you get punished if the risk doesn't work out. If you've gone through the process of considering a robust process, should we have taken this risk or not, then actually taking and pressing the button is what's encouraged.
Yeah, I mean, we have, as part of my team, we have a risk team embedded within the front office that whenever we're talking about change, any strategic change or even smaller change, we're always trying to think about what are the risks of doing something differently or going into a different market. It still has some way, a little way to go to embed everything fully. Obviously, there's always improvement you can make, but we do try to look at things through a risk lens as well as a commercial lens, and it's balancing that kind of opportunity cost, I guess. I mean, if we look back to some of the issues that banking has faced, if we had put in better controls before things like the LIBOR scandals and the FX rigging scandals, the cost of doing that would have been far less than the fines that the banks were given. So although you may not see money walking out the door by putting in controls immediately, but conversely, by not putting in controls, you're very likely to see money walking out the door, whether that's because of an operational risk or a fine or some other way that you've lost money, apart from the fact that you just may not make as much as you'd like to in the first place. And
it could be, Katy, as we advance with digital technologies, that the actual cost and overhead is reduced anyway as it moves from people and manual processes through to automation, AI.
Yeah.
So, that whole discussion is reduced for the most innovative of the organisations in our sector.
And actually, technology's got cheaper, hasn't it? So I've been doing some work on this lately for some of our technology strategy, and I think the costs of really amazing technology now versus 5 years ago even it's much lower to do some quite funky stuff.
And from what you're saying there as well is giving that visibility across the enterprise understanding your processes, understanding the risks that are associated with them, building the right controls in place, and empowering all of the right people to be able to actually drive, you know, that business forward. To your point, Andy, you know, all of the innovative businesses are encouraging their people to take risks, but it's taking those risks with visibility of the whole enterprise rather than just in a little silo. Just on another question regarding regulatory that's come up. So, and this is something that, you know, I've heard about through the pandemic around sort of, should we be deglobalizing because of supply chains? You know, when there was the impact of when China went into lockdown before the rest of the world, you know, suddenly Apple weren't able to deliver phones, etc. So do you think that, you know, there could be a risk of protectionism being brought in by governments on the back of, you know, trying to say we're protecting strategic assets and, you know, there is deglobalization? Or do you think that's a sort of a false argument? So Gareth, with your hat on of sort of looking at broad tech space, how do you sort of see that?
I think, I mean, let's face it, the idea of protectionism, I think, was already becoming more prevalent way before COVID, right, in terms of the current US administration. And to be fair to them, I mean, it's not just Donald Trump and his team. It's probably the same in China as well, in terms of thinking more about how we self-develop technology before. They've got to start thinking more about how could they work on their own. Japan's the same. You've seen the same language from Macron as well. And to be fair, you could argue that some of that is needed, that when a pandemic hits, it would help if you could be, to some degree, more self-sufficient. With that said, you can clearly go too far. I mean, let's say, for example, you go to the extent of trade barriers, trying to argue that's about building up or protecting your assets and becoming more self-sufficient. What happens if your country is not the first one to come up with a vaccine, but by then you've driven a wedge between you and the market that you really need to be doing trade with? So I do think that some level or desire to be a bit more self-sufficient isn't necessarily a bad thing, but the way that certain markets are going about it in terms of their rhetoric is probably unhelpful at the moment. And yeah, I'm sure is more than just saying or making decisions that I think are unwise. I think are going too far. They're not thinking about what needs to happen down the line, where when it comes to solving the pandemic, I do think it's going to require a global solution.
And Jeremy, just a quick point, working, you know, within BT, it wouldn't, everyone would have seen in the press, you know, the big debates around using a certain Chinese technology manufacturer, which is, you know, fundamental to the networks that we look to build around that whole security piece. And so that is something which is only going to become bigger discussions as we move down the line, and, you know, you choose which side you want to be on. You know, it's implicitly going to have implications, isn't it?
Yes, absolutely, absolutely. So I'm just conscious of time. So we've got about 7 minutes left of our time. So I'd like to sort of just move the discussion a little bit into sort of the recovery and reset sort of space. You know, I'm hoping that we are now, you know, at some point we've got 4th of July, obviously, you know, here in the UK, we can start thinking ahead to the recovery and back to sort of the new normal, as people call it. But, you know, what do you sort of, with that in mind, you know, what do you sort of think are some of the positives that businesses can and should try and take out and sustain following this crisis that will help them with resilience going forward? And Andy, I'll start with you on that one, if I may.
Yeah, agility of decision making. Let's be honest, for BT, that's been something where we've not been the quickest, but now, you know, when we've been forced into it, being very clear around who's making a decision and then getting on with it. Taking risk, ironically, you know, as an anecdote, we were looking at home working, you know, for lots of people in our call centres, but the term, you know, the data risk would be too big, so we canned a large project. But whereas, you know, you get forced into an environment, you as an organisation, fight or flight, you come up with a solution. It might cost a bit of money, but then you get it done. You get it done quickly, and I think that is one of the biggest things when I talk to some of the leaders across our business is agility of decision making and not being afraid to take risks as long as you've gone through a robust process to manage those exposures which you'll get presented.
Yeah, that's a very good point. And from a perspective in sort of HSBC stroke financial services, what's your thinking along those lines, Katy?
Yeah, I mean, I think, Andy, your points are completely valid and absolutely echo those. And I think in addition, one of the things, certainly from a trading floor perspective, we've had desks as well, to your call centre point, where we never thought they'd be able to work from home, and they can now. And so giving that ability to work more flexibly, or at least in different environments, is key and something we're working on going forward. The other thing I'd say is the community and teamwork. This is probably built, I think some of the factions that sometimes exist have probably been completely broken down, especially HSBC, big global organization where we have lots of video conferences, and there might be a VC of 20 people, 10 people sitting in a room and the other 10 on various screens. Actually, everybody being on Zoom sets the playing field more levelly, whether it's global or people working from home, not working from home, and so on. So I think a few different angles there.
Yeah,
I think COVID has forced or to us to test things that people have talked about for ages, right? For a long time, people wanted to encourage more working from home. There's always a degree or a stigma around people not taking it seriously working from home, you know, and that, amongst many other things, has been proven by COVID positively. I just hope that we can get the balance right between that and to Colin's point earlier, making sure we do the right things for people's mental well-being. There is a lot of good things about remote working, but there can be some challenges as well.
Yeah, and it's probably sort of related to that, Gareth, is, you know, obviously there's lots of different variable challenges as businesses begin to reset for the future. And we know it's not going to be exactly the same as what it was before this crisis. But, you know, what sort of plans do you think can be put in place to help reduce that risk and accelerate the recovery, and maybe something that can actually be put into that operational resilience for future recoveries as well?
Yeah, so I think there's one thing, and I think some of the regulations drive this now anyway, it's about becoming now more outward looking and more market centric in your plans. I think everything else about risk and regulation up to this point has been, look at your organization, think about what we've got to do to protect it. Now it's more about, think about those organizations that you connect with, and moreover, individuals you connect with, and think about resilience from that point of view. If you do that, then actually, not only is it the right thing by your customers, but it also means that you'll see big chunks of the business, you can almost frankly scope out a business continuity plan. You know, they might do things that are important day to day, but they're less important or less critical during a disruption. So long as you start with a market-centric view when you do that. I think the other thing is somehow is how we use future planning, what we've learned from today to drive greater agility in the business. Again, from a personal experience, there's one thing about going from a large organization to working now more on my own, but within a network, is the speed at which I can change the direction of what I'm doing and how that's helped me. And I realized that actually when I was part of a larger organization, I couldn't do that. But how can a large organization to some degree get that agility that allows you to do things differently, faster when you need to?
Yeah. Perfect. And so we're into our sort of last minute, so I think I'll sort of stop the discussion at that point. But so really sort of big thank you to all three of you for some great insights. You know, I think we've had a pretty wide-ranging, healthy discussion, and I'd just like to, I suppose, very quickly, just one last sort of question for each of you, and we'll just do a quick round, is, if you could prioritize and invest in one area to ensure operational resilience, where would you put that focus? So I'll start with Katy, and then we'll just quickly go around.
So absolutely on people and mental health.
Yeah. Gareth?
And it sounds cliche, but it's just Katie's answer there. It's literally going to say people. So there you go. People, whether that's your people or your customers, right? There you go. So.
I won't say the same thing again, Gav. Technology there, Jeremy, to enable us to cut across organisations and bring all of this disparate information together into a pot where we can actually derive meaningful insight from it. One of the big challenges is having siloed information.
Fantastic. And I think that sort of has borne out in the survey that we ran, which the two areas that people said were, people and technology, those two coming together, I think is hugely powerful and drives that agility that you guys have talked about. So finally, once again, thank you very much to all three of you. Thank you very much for the questions from all the attendees, and thank you very much for your valuable time for attending for this hour. As I said before, we have got the survey. We will be sharing the results of that shortly. The video recording of this session will also be available, and we'll share that with you. So just thank you very much to the panel, to everybody attending. Be safe and look forward to catching up again soon. Thank you very much.
Thank you very much.
Thank you.
Thank you. Thanks.